Silver has quietly become one of the most talked about assets for people trying to protect their savings. And if you're new to this, you're probably wondering where to even begin. There's a lot of noise out there, confusing terminology, conflicting opinions, and honestly, a lot of people trying to sell you something before they explain anything. So let's slow down and actually walk through what silver investing looks like when you strip away the hype. First, it helps to understand why silver even matters as an asset. Unlike most things you can buy, silver has held value across centuries through currency collapses, wars, and financial crises. But it's not just a historical relic. Silver today sits at an unusual intersection. It's treated as a monetary metal, something people buy when they're worried about inflation or currency weakness, but it's also an industrial metal, used heavily in solar panels, electronics, and electric vehicles. That dual identity is part of what makes it different from an asset like gold, which is almost purely monetary. Now, here's where a lot of beginners get stuck. Should you buy physical silver or something like an ETF? Both have trade-offs. Physical silver, coins or bars, means you actually hold the asset. No counterparty risk, no dependency on a financial institution staying solvent. But it comes with storage considerations, and when you eventually sell, there can be a spread between buy and sell prices. ETFs, on the other hand, are easier to buy and sell quickly, but you don't actually hold the metal, you hold a paper claim to it. For a lot of long-term investors, the appeal of physical silver is exactly that independence from the financial system. Let's talk about how people typically get started. The most common entry point is buying recognized coins, things like American Silver Eagles or Canadian Maple Leafs, because they're easy to verify, easy to resell, and widely recognized. Bars tend to have a lower premium over the spot price, which matters if you're trying to accumulate more ounces per dollar. But here's a mistake a lot of new buyers make. They rush in during a price spike, when everyone's talking about it, instead of buying gradually over time. Dollar cost averaging, buying small amounts consistently regardless of price, tends to smooth out the ups and downs and removes the pressure of trying to time the market perfectly. Another thing beginners often overlook is premiums. The price you pay isn't just the spot price of silver, it includes a premium for minting, distribution, and dealer margin. This premium can shift dramatically depending on demand. During periods of high buying interest, premiums can spike well above normal, so it pays to compare multiple dealers rather than buying from the first place you find. Now, why are people paying attention to silver specifically right now? Part of it comes down to supply and demand dynamics that don't get much mainstream coverage. Industrial demand from solar and electric vehicle production has been steadily climbing, while mine supply hasn't kept pace, partly because a lot of silver is actually a byproduct of mining other metals like copper and zinc, not something miners are targeting directly. That creates a structural tension between how much silver the world wants to use and how much is actually coming out of the ground. There's also the monetary angle. When investors and central banks start worrying about currency debasement or economic instability, precious metals historically see increased interest as a store of value. This isn't a guarantee of what happens next. Markets are unpredictable, but understanding this historical pattern helps explain why silver conversations tend to resurface whenever economic uncertainty rises. So if you're just starting out, here's a grounded way to think about it. Treat silver as one part of a broader approach to protecting and diversifying what you have, not a guaranteed path to quick profits. Start small, understand the difference between physical and paper silver, pay attention to premiums, and avoid making decisions based on panic or hype. The people who tend to do well with this kind of asset are the ones who approach it patiently and stay informed, not the ones chasing the latest headline. If you found this helpful, it's worth spending time understanding how supply deficits and industrial demand are shaping this market right now, because that's really where the next chapter of this story is being written. What's stopping you from getting started? Is it uncertainty about where to buy, or just not knowing how much is enough? Let me know in the comments. I read every one of them.